Welcome to Trading for Life, where we unravel the fascinating world of the stock market. Today, we're demystifying the intricate gears that power this global financial engine. Whether you're a curious novice or a seasoned investor, this video is your gateway to understanding the mechanics that drive stock markets. At its core, the stock market is a marketplace where shares of ownership in publicly traded companies are bought and sold. It's like a bustling bazaar where investors trade pieces of these companies, hoping to capitalize on their growth and success. But how does it all work? Let's break it down step by step. 1. Companies go public. It all begins when a private company decides to go public by offering shares of ownership to the public through an initial public offering, IPO. This is like the company's grand debut on the stock market stage. 2. Buying and selling. Once a company's shares are available on the market, investors can buy and sell these shares through stock exchanges. Major exchanges like the New York Stock Exchange, NYSE, and the NASDAQ provide platforms for these transactions. 3. Supply and demand. The price of a company's stock is determined by the laws of supply and demand. If more investors want to buy a stock, demand, then sell it, supply, the price tends to rise. If more investors want to sell than buy, the price tends to fall. 4. Market indices. To gauge the overall health of the market, indices like the S&P 500 or Dow Jones Industrial Average track the performance of a selected group of stocks. These indices serve as benchmarks, reflecting the market's ups and downs. 5. Fundamental and technical analysis. Investors use a combination of fundamental analysis, evaluating a company's financials, earnings, and growth potential, and technical analysis, studying price patterns and trends, to make informed decisions. 6. Long-term and short-term strategies. Traders adopt various strategies, like value investing, seeking undervalued stocks, or day trading, buying and selling within the same day, depending on their goals and risk tolerance. 7. Market influences. External factors, such as economic indicators, government policies, and global events, can influence stock prices. For instance, positive economic data might boost investor confidence, leading to higher stock prices. In this video, we'll explore the inner workings of the stock market, decode trading jargon, and provide insights into how investors can navigate this dynamic landscape. Whether you're interested in building a diversified portfolio, seeking capital appreciation, or simply curious about market dynamics, you're in for an enlightening journey. So, grab your notepad, get comfortable, and let's dive into the captivating world of the stock market. By the end of this video, you'll have a solid grasp of how stocks trade, how prices fluctuate, and how investors make strategic moves to potentially unlock financial success. Thank you for watching. Thank you for watching.